Hello again, everyone. It's Vince Four from TradingWinds.com, and today I'd like to talk to you about a strategy and along with a couple of tools and helpful hints that you can use to really dominate the markets. I'm talking about our brand new, recently launched Victory 2.0 trading strategy. Now, I will explain first what you're seeing on the chart here and then how you can use this to your advantage. Now, one very simple thing before I even get to the strategy, a simple thing that you can use on your own that's available on any charting platform is a simple moving average. The line I have here in blue is the 20 period simple moving average. What the 20 period simple moving average does is keep you on the right side of the market, meaning when price is above the 20, it'll usually be moving higher. And when it's below, it'll usually be moving lower. Now, why is it such a good tool to use to keep you on the right side of the market? I mean, there are many different periods you can use on a moving averages. There's many different types of moving averages. There's exponential, weighted, etc. The 20 period simple moving average is best in my opinion, just because it is so widely used by so many professional traders as well as retail traders. Uh, and so there's a lot of eyes on it, plain and simple. And it is a very, very helpful tool. It also helps you identify the amount of momentum behind a move. And you can simply spot that by looking at the degree of slope on that 20. In other words, if it's sloping higher, right, obviously price has been moving higher. I mean, the way the 20 period simple moving average works is it will count back 20 price bars and it will average out the price from high to low on every bar, right, over the past 20 and plot that value. So for the line to be sloping higher, that means price has been moving higher. So the higher the degree of slope, the more buying pressure there is. And it works the same in the opposite direction, right? The higher the degree of slope downward, the more selling is going on. So that alone, which is available on any charting platform, is one great tool that you can use just to make sure that you are on the right side of the market. The other thing you can do is use multiple time frames. In other words, right now, I'm on a monthly chart here, okay? And you can see that on the S&P 500, the SPY, the ETF for the S&P 500, we are well above the 20 right now, right? If I were to move down to a weekly time frame, I'm just barely above the 20, but I'm there. And if we move to the daily time frame, you can see now that I'm below the 20. Okay. What you want to be able to do is make sure that you're long only when price is above the 20 on all three, the daily, the weekly, and the monthly time frame. If you are a shorter term trader, meaning you trade on the 15-minute chart, for example, you want to check the two higher time frames. So you may want to check a 30-minute and an hourly chart. And if the 15-minute, 30, and hourly, if prices all three above the 20, then you're trading in the right direction. If all three are below the 20, then you should be short, not long, etc. Extremely helpful. That alone will give you an edge. But what else I'm gonna show you here is really gonna put the odds in your favor here. And the Victory 2.0 trading strategy gives you all of that and a lot more. So let me explain what you're seeing here on the charts. First of all, there's these buys and the sell signals. This is the algorithm that, when it comes together, is giving you a high probability um, uh, buy or sell signal, right? Now, you also see these green or red dots. Uh, what those are what we call re-entries, meaning they are the exact same as the buy and sell criteria, right? But the reason why we label it as a dot rather than another buy, for example, is because we're already long. We're already in a buy. And so the dot is just telling you that this is, once again, a good area to add to your position or to get in if you missed that original buy. Okay. And the TP that you see here and here and here, those are suggested areas where you might want to scale out of your position, right? Take partial profits. And, what you can do is take some off, add to it at the next one, take some off again, add, etc. That's a personal preference. I'm going to show you how you can remove those if you'd rather not use that. But the core of the strategy is the buys and sells or these reentries along with that 20 sloping in the direction of the trade. Okay. And then we also have these ribbons down below. And what these are they are confirming the two higher time frames. So as you can see here, I am on the daily time frame. But if you look at the ribbons, the top one is a weekly and the bottom one is a monthly. So what this is telling me is are we are we above that 20 or are the price bars green on the weekly and the monthly as well as the daily? Obviously here with the S&P, we can see that the price bars here, that are colored according to the strategy, right? So if we're long, all price bars are green. If we're short, all price bars are red. And if we should not be long or short, it'll give us yellow bars like we see here. Okay. But what we want to see for a trade is to have the price bars the same color on all three time frames. Again, let's say you're trading on a 1 minute. Let's go to the absolute opposite extreme. We're going to be on a 1 minute time frame. So on the 1 minute chart, you can see that we are above the 20 bars are green, right? Now, if we come down here, look at this, the 5 minute is green and the 15 minute is green. So, excuse me. So that means that a trade entry like this is totally valid and you can feel free to jump in. Now, I'll give you the criteria that we look for in total on a trade in a sec. We'll put this all together in a nice example and show you what we look for, long and short. But that is what you're looking for on the chart. Now, there's one more piece to this indicator, which is this table on the left side here. Now, what this is just a watch list. You can control the symbols that you put in here, and what they will tell you is whether there is a current signal or not on the time frame that you're on. So right now, the Euro JPY, the Euro Japanese Yen, has a sell symbol. So if we go to the Euro JPY here on our chart on the daily time frame, right, we're going to notice that there is a brand new sell. Okay. Now, is this the kind of sell we want to take? No, it's not, because the 20 is not sloping in the direction of the trade yet. All right. And also, have a look. This one's red. It's a sell, but these two are green. The higher time frames are green. So we want all three lined up, not, out of order. So not a valid setup there, but this is a nice list to have. So let's go into the settings of this indicator and let me show you. First of all, on the style tab, here are the buy, take profits, sell, take profits, exits, original signals, the reentries, all of that, and the bar color. You have full control over this. You can remove some of these. You can add them. You customize it all to your liking. Secondly, if we go to the inputs tab, here's the table. You can uncheck this and get rid of the table completely, right? And you'll see it disappear. There you go. Or you can leave it on, and you have a choice here. You can put anywhere from 1 to 20 columns on here, or rows, excuse me. So if I up this to 10 from 5, right, you're going to see this change from 5 to 10 here in a second. There you go. So you have a choice up to 20 symbols, and you can put those in here. You can adjust these anytime you want. There's 20 of them, and you can keep an eye just so you can see what has a buy, what has a sell, what has an exit. It's all there. Very, very useful. All right. Now, let's go through some examples. So first of all, if you go to a higher time frame, let's say you go to the chart of the SPY, the S&P 500, and we go to a monthly time frame, right? This is a good way to judge the overall direction of the market, right? Are we in a bull phase? Are we in a bear phase? And so on. So, going back really to 2012, we've been in a bull market, right? There have been blips here and there, but overall, we've been in a bull market. And according to the monthly time frame, we still are. Now, if you're noticing here on the ribbon that we have both monthly and monthly, that's because we are on the highest time frame that we use. We don't go any higher than that. So that's why it's going to show you that. But you can clearly tell where your edge is, right? When the time frame, and I know this is all one time frame, it's monthly, but whether we're using the monthly or the weekly is obviously going to show you the weekly and the monthly here. Or sorry, the monthly and the monthly again, because it's the only time frames that are higher than that. If we go back to the daily, now you're going to see the daily, weekly, and monthly. There you go. But you can clearly tell when all three are green where your edge is, right? And that's what you're looking for. So what this system is allowing you to do is not only trade with the trend, but you can tell how strong the trend is, not just by how fast the price is moving, but the slope on that 20, right? The degree of slope. Also, you in one glance, without switching time frames, you can tell whether you are in line with the two higher time frames, right? That is a major edge in your favor. And then the algorithm pinpoints the uh, the best places for you to buy or add to your position along the way. And then any change in color, whether you get a yellow or a red, you want to exit your full position. Again, if you want to take partial profits along the way, we also have uh, those areas highlighted as well. Now, it works on stocks. Here's Abercrombie and Fitch, right? And gone on a real nice run. Look, when all three time frames are aligned, this is where your major edge is. Any of these purchases throughout here would have made you money. Look at this stretch from this buy. You could have added here, added here, added here, here. And here's your exit on the color change. All right. Now, what is the actual criteria we look for? Let me show you exactly how I use this, because the intent here is not to take every single symbol. The intent is to take the highest probability trades out there. I am very risk averse. I hate risk. I'll do anything to avoid risk. So I am extremely conservative. And this is how I use the system. What I look for is a buy or a sell, right? In this case, I'm going to look for this buy. Now, what else do I want to see? I want to make sure that that bar is close to the 20. Why? Because when price moves away from the 20, it tends to snap back, and you don't know when that's going to happen. So if you're buying out here or out here, you're taking the risk that shortly after you get in, it has a retracement against you like that, and you find yourself in a big hole right off the bat. We don't want that. So we want to make sure that the entry bar is near the 20. Secondly, on that day, we want to make sure that the close on that bar for a long trade, the close needs to be in the top half, preferably the top quarter of the bar. If you're getting a buy here, but uh, the close on that bar is in the lower half of the bar, we'd not be interested. The reason being is if you go and look at most of the candles that close in the top half or the top quarter, all right, they tend to follow through and move or continue moving in that direction for the next few candles. So we want that as well. Another thing we look for, obviously, is the slope on the 20. Not only do we want slope, we want a healthy degree of slope. So at least a 45-degree angle or better, but any sort of slope is good enough. The other thing we want is we want to look to our left and make sure that there's a lot of blank space here on the chart. Why? We don't want a lot of previous activity. We don't want to trade into overhead resistance, right? We want this to move very easily. So we're looking for blank space here. If the stock or whatever market you're trading is moving into all-time highs, that is the absolute best case scenario. Okay. So again, we get a buy. We're near the 20. We're closing in the top portion of the bar. We have slope on the 20, and we have no overhead resistance, and the two higher time frames are in line with the time frame we are trading. Right there, that criteria together is all you need to not only have many more winners than losers, but have your winners be much greater than your losers. I've been using this since 2019, and it has just been phenomenal. And there's a nice run. And if you wanted to add to your position, if you're a little more aggressive and want to add, we pinpoint exactly where you can add, where you can take some profits off the table along the way. And again, any change in color, you want to close out your full position. Now, this doesn't just work on stocks, it'll work on any market, any time frame, any exchange around the world. It's based solely on technical analysis and is extremely effective. If you want to trade gold, for example, let's go to the gold chart. Here it is, the most recent trade here that you're going to see right here. These couple of re-entries. So back in here, we had a buy, but look at the 20. It was completely flat, right? So it's because we were in a bit of a channel. You don't want to take those. You want to make sure that you're getting out of that channel and that the other criteria that we're looking for is in line with our trade. Back in here, we didn't have slope. But here, though, and here, not only did we have slope, prices near are the 20, right? Closing near the high of the bar. And when we look to our left, we see a bunch of blank space. And then we look down here and we confirm that the two higher time frames are in line. We have real solid slope. We enter and off we go. Nice and easy. Why? Brand new highs, no overhead resistance whatsoever. There's already a ton of buying pressure. That puts the odds significantly in our favor. And that's what you want when you're trading. Okay. So works on stocks, works on commodities, futures, Forex. Already showed you the Euro JPY. What else? Bitcoin. If you trade Bitcoin, hey, whatever you can, chart, right? Here's a chart of Bitcoin. Now, look at these signals in here. Are these the kind of signals you want to take? No, they're not. Why? You have a flat 20, right? It does not match the criteria that we're looking for. If you get this sell, right? Is it a high probability sell? First of all, 20 is completely flat, right? Secondly, look at the two higher time frames. They're both green. They're not red. That means you're counter trend trading. You're not trading with the trend. You're trading against it. So you want to make sure that you're getting in. Now, let's say here, okay, barely any slope at all whatsoever. But let's say you took one of these buys in here, right? Your loss is going to be very small. Now, there's only one thing we cannot protect ourselves with, and that's a gap, right? If this market gapped all of a sudden and closed up here and opened down here, there's not a whole lot we can do about that. But how we protect ourselves is with our money management plan. Now, when you get a copy of the indicator, you're going to get a training class that not only teaches you all the rules, exactly how we trade it, but we also give you our money management plan, which will guarantee if you follow those rules, you'll never take a big loss again. Okay. And that is a big claim. I know I'm using the word guaranteed. I'm telling you, though, that if you follow the rules, if you don't follow the rules, I can't guarantee it. But I can guarantee you that if you follow the 5 money management rules we will give you, you will never take a big loss again. And what do we do here? Right? Which are the trades that offer us the biggest edge? Quickly, your eyes should just go to the areas where the 20 period moving average is sloping. Okay. Plain and simple. You enter anywhere more or less where the 20 is sloping, and it's hard not to make money. But if you enter exactly where we tell you to, here, where everything falls in line, let's look at this one here. Okay. So we get this re-entry, right? Are we near the 20? Yes. Is the candle close in the top portion of the bar? Yes, it is. If we look to our left, is there any resistance? No, there's blank space, right? If we look at the slope, not only do we have slope in the direction of the trade, but it's very significant, telling us there's a ton of buying pressure, right? We look down here, the two higher time frames are both in line with the time frame that we're trading. So we enter and boom, off it goes, right? And then any change of color, we're out of the full position. It really is That simple. Again, you can trade any market, any time frame, any exchange around the world. It works extremely well, and it's available on TradingView and on Metastock. Okay. Thank you very much for watching, and see you on the next video.